Good afternoon, ladies and gentlemen, and welcome to Monday's Market Outlook here at Top Gun Options. My name is Matthew Buckley. My call sign is Wiz, and after this brief, you need to head to go.topgunoptions.com/FT. That stands for Full Throttle. Folks, we do Full Throttle about 3-4 times a year, and it is that time of the year where we're going to be opening up the doors this week for, what is it, 4 live trading and trading sessions. This is all on me. This is free. Head to this link right now, go.topgunoptions.com/FT, and you can join us starting tomorrow for our primary live trade brief at 1 o'clock. We're going to do Accelerated Retirement Wednesday at 1 o'clock, and then Thursday we're going to do our Analyze Your Trade and debrief. I'm actually getting ready right now, 1 o'clock Eastern, to do a members brief. This is members only at 1 o'clock. Our weekly options brief. Check out what we did last week. We did a 45.5, 46 bear call spread on FXI. In 3.5 days, this trade made $2,400 on $5,600 in risk. And I'm getting ready to put on another FXI trade. If you don't know what FXI is, folks, it's the iShares China large cap ETF. We put on a bear call spread last Tuesday right there, and look what happened. Between when I said get bearish on FXI and when we closed it on Friday for a full $2,400 in profit, the FXI imploded. Guess what I'm going to do in about, 23 minutes? We're going to get bullish on FXI. So, folks, 4 live trade briefs for free this week. Go.topgunoptions.com/FT. And do me a favor, share that on your social media. Tell your family, tell your friends, because Full Throttle is an absolute blast. This week we're going to be covering what's going on down south with the Trump of the tropics down in Brazil. But more importantly, we're going to be talking about what's going on with China. Lighthizer, Mnuchin, I think Wilbur Ross, the heads of the 5 families are heading over to China, or are in China actually as we speak, to continue negotiating with China to see what we can get as far as a trade deal. The president over the weekend, folks, I'm not even going to cover the Mueller report. It's an absolute disgrace that there are people that aren't, that everybody isn't happy, that apparently, I feel like Forrest Gump, and just like that, all the Democrats hated Bob Mueller. For months, they said, hey, we need to protect this Bob Mueller. We need to pass a law to protect him. The president, if the president tries to fire him, not a word. Today, liberals are just frothing at the mouth that Bob Mueller is somehow a Russia plant. I'm fine with this, folks. The more that Democrats and liberals run around with their heads cut off, still screaming Russia, it only helps the president, folks. But anyway, let's get back to what matters for this country. Let those folks show how crazy they are, because the more they dig, the just worse it gets. Anyway. Trump says tariffs on Chinese goods will stay for a substantial period of time. And what did we do over the weekend? The president sent a couple more ships sailing through the Strait of Taiwan. Taiwan last week asked for more F-16s. They asked for more tanks, and they're going to get them. Why do you care about this, folks? You should care about this because the trade deal is a ruse. It's nothing but a ruse, ladies and gentlemen. China has said, hey, man, we're going to take back our renegade province, and we don't see it as a renegade province. We recognize Taiwan as its own independent country. I've taken part in the defense of Taiwan exercises. This is the real story. China could care less about a trade deal. They really care more about their strategic dominance in the Pacific and also becoming a world superpower. So this is the real story, folks. The trade deal isn't going to be worth the paper it's written on. The Chinese are going to continue to steal intellectual property. And when the market really recognizes this, we're going to head lower here, folks. So stocks right now are kind of meandering. Dow's down a little bit right now. They're drifted higher, drifted lower. We're kind of in this no man's land, fluctuating between gains and losses as we're waiting for some GDP data. But check this out, folks. I mean, we got smashed towards the end of last week, which is great. We had a ton of bearish trades on that printed money. We actually made more than $5,000 in bearish China trades. We had 2 trades expire on Friday. So look at that. Over $7,000 month to date just in bearish China trades. And we're going to throw some more on this week. That's why I need you to head to go.topgunoptions.com/FT to join us. really interesting inversion in the bond curve today, which isn't good. So the former Fed head right here, Grandma Yellen, came out and said, "Hey, bond market could be hinting the need for a what? A rate cut." Last Wednesday, ladies and gentlemen, the Fed surrendered. They just absolutely, completely gave up. They could not have been more dovish. And now Janet Yellen's actually calling for a rate cut. So, folks, the Fed's dead. Just like Zed in Pulp Fiction, Zed's dead, the Fed's dead, folks. And this rally is nothing but a Fed rally. It really isn't. Yeah, the S&P 500 has been buying back their own shares. This really hasn't been an institutional rally. The institutions started buying maybe back around here, but they're sitting on their hands now, folks. I think we're heading back down to this 200-day moving average on the S&P 500, and you better be ready, folks, because if we don't hold it, it really is look out below. We're in a holding pattern waiting for earnings, and we're also in a holding pattern waiting for a trade deal. Any bad news on either one of those fronts, and this thing's going to get pounded into the dirt, and I'm going to show you how to do it. We're going to and we're going to continue to pound some of these limousine liberal stocks, like a Google, like a Twitter. I can't believe that Jack Dorsey still is not in jail. The guy testified under oath in front of Congress, the CEO of Twitter, that he doesn't shadow ban and they don't ban political voices. And then 2 weeks ago, the company came out and admitted that they do shadow ban and they do everything that the guy testified under oath that he did that they don't do. So last time I checked, Roger Stone and a bunch of other guys are going to prison for a long period of time for lying to Congress. But apparently, if you're a limousine liberal from the Bay Area, you're allowed to lie under Congress. So very, very interesting stuff going on here, folks. Tomorrow, we're looking at some housing numbers, building permits, and the S&P Schiller, along with the Conference Board's consumer confidence number. So big macroeconomic data tomorrow. That's why you need to join me at 1 o'clock for our live trade brief to see what's going on. We also are going to get some Mario Draghi words, which you want to talk about dovish. Mario Draghi literally is a dove. Remember, this is the guy that years ago said, "I'll do whatever it takes to save the Eurozone." So let's see how much more dovish this guy can get. Folks, real quick, one of the reasons I think the market slammed on Friday was because the Fed really capitulating isn't bullish. At the end of the day, traders are starting to wake up to, if the Fed's that dovish, what aren't they telling us? Something must be pretty bad. I mean, look what happened. We're almost back up to where, that October 3rd Fed chief going, "Hey, man, we're going to step on the accelerator and really raise interest rates." We had a temper tantrum, and then now the guy's not even close to raising interest rates. What happened in between this point and this point? Well, what happened is this. The Fed was scared. The Fed got scared by Trump, and the Fed got scared by equity markets. So, there is a Fed put underneath this market, ladies and gentlemen. But if we run out of belief in that put, that's when the market's going to go and implode, folks. That's when the Fred Sanford big one is going to happen. Thursday, we get the final GDP print. That's going to be interesting. A bunch of Fed lieutenants speaking, pending home sales. And then on Friday, we get a lot of macroeconomic data, some personal spending, personal income, Chicago PMI, consumer sentiment, new home sales, blah, blah, and some inflation stuff. So this is a big macroeconomic data week. And if the data don't look good, I think we're going to head lower here. So you have to be very, very careful this week. So make sure you're hedged. Matter of fact, I'm going to teach you how to hedge this week and also how to trudge. Yeah, you heard me. One's a hedge, and then another is a trudge. So a hedge, I don't mind losing money on, right? It's like an ejection seat that's never used. You didn't lose money on that ejection seat, folks. It was there to save your life. So a hedge, I don't mind losing money on, but a trudge is a trade that acts like a hedge, meaning it can lose. It's most likely going to make money. I want to make money on a trade, but it also serves as a portfolio hedge, okay? Don't want to steal my thunder. That's going to be part of one of our briefs this week. So you need to head to go.topgunoptions.com/FT and register for free for our full throttle briefs this week. Okay, I got to get going. I got my weekly options brief here in a couple minutes where we're going to be talking about China and maybe a bullish trade on Amazon. I think Amazon's back, baby, and we're going to be trading the lights out of it like we did last year. Okay, have a great rest of your day. Happy hunting. Make sure you hedge, and God bless, and I'll see you this week for Full Throttle.